As always, we'll be analysing the performance of the last week. We'll be doing live coverage during this session of an end-of-week summary of gold, silver, oil, natural gas, and the commodity currencies. We'll be looking at the top trades of the week. We'll be covering live market commentary and technical analysis. And, of course, looking ahead, the week ahead, key events looking forward as well as answering any questions that you may have too. So, the gold price this week, currently we are looking very interesting at the moment at $1,242 an ounce. The major news this week, gold slips as the US dollar surges on upbeat economic data. So gold prices ending the US trading session slightly higher on Thursday after 2 days of declines on upbeat US economic data, whilst the US dollar surged as initial jobless claims fell, signalling the labour market may be recovering. Upbeat US economic data this week strengthened the US dollar, which had an inverse impact on precious metal prices, presenting commodity traders a highly lucrative opportunity to buy long the US dollar and sell short gold. So we'll highlight that, just show you in our top trades of the week. It's one of the trades that we took that played out very well this week. The main feature of the marketplace this week was the unemployment report, which is heavily linked to the FOMC monetary policy. The number of initial jobless claims in the week ended January the 11th came in above expectations with a drop of 2,000 to 326,000 from the previous week, and core inflation in the US was flat in December, in line with market expectations. The consumer price index, the CPI, last month held steady at 1.7% year on year, the same as in November, whilst the Philly Fed manufacturing index from the Philadelphia branch of the Federal Reserve also rose to a reading of 9.4 points in January from December's downwardly revised 6.4. So the January figure was above market expectations of 8.7 points, and this put additional pressure on gold prices while boosting the US dollar this week. So we'll take a look at that very shortly on the charts. Before we do so, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas, and the commodity currencies. Also train thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and also a regular contributor to a number of financial publications, speaking at numerous trading seminars, webinars, and workshops. Joining me at running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, the formula, mindset, and tools that can give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. So that is a little bit about ourselves. So we'll look at the gold price. Gold actually trading right mid-range at the moment at $1,240 an ounce just this morning. So we'll take a look at the technical charts very shortly. Before we do so, we will just go over some of the top trades of the week using the Gold and Silver Club signature trading strategies. So first of all, earlier on this week, we did have quite a lot of pressure on the Australian US dollar. In actual fact, Australian US dollar has since broken down to below 3-year lows this week. So we were very nicely set up for that earlier on this week from a good sell signal at a key level of resistance, a Fibonacci level at 0.90508. This is where we triggered short. We had a 25 pip stop loss on that, and we came down and we hit our profit target at 0.89106, which was for 140 pips, $1,400 for each lot traded for a 5-to-1 risk to rewards. That was earlier on this week that we got the signal to sell short Australian US dollar. In fact, it's continued to give us sell signals throughout this week, and now we're starting to reach a bit of a bottom at the moment. We're starting to consolidate. We'll take a look at the charts with you very shortly for Australian US dollar. We've also had a nice opportunity, as you would expect, because gold and Australian US dollar are heavily correlated. Gold also gave a nice sell short signal earlier on this week on Tuesday. We had a nice entry from a good setup there on the, you can see we're at a key level of resistance, and we also got a nice inverse hammer there to give us a signal to sell short. We've come in there at 12.51, and we came down to key level of support at 12.36. So the risk on that trade, 45-point risk for 150 points was the profit. So $1,500 profit for $450 risk for a 3-to-1 there on gold on Tuesday. We then also, this should say US dollar index at the top. US dollar index, we had a buy this week as well. This was after the data which came through, the very strong data from the US, the employment figures, which gave us a really good signal. We fired off from an entry at 80.64, and we came out at 81.05 there. So we had a profit, a quick in and out trade there. So 41 pips profit, 20 pips risk. We had a nice 2-to-1, and this is the US dollar index, which of course moves inversely to gold. So nice opportunity to trade the inverse correlation there midweek as well. We also had a nice trade on copper this week, which was an entry at 3.3173 from a major level of support, bouncing off the 3.305 level. And we had a 20-point risk on that, 44 points profit on that trade. So $440 profit for each lot traded for a 2-to-1 on copper. And finally, this was just today that we triggered, and we just hit our profit target just this morning, which came in at 107.38. So we had a nice 97-point trade on this just this morning. We entered at 106.41. It bounced off a key level of support. You can see that's a fourth bounce off that level again, around the 106.40 level, which held 50-point risk on that, 97-point profit for a nice 2-to-1 on Brent just this morning too. So we've had a number of nice trading opportunities this week, and we'll take a look at the live charts because we're seeing some interesting moves just this morning. Okay, so bear with me as we just actually move you across to my live charts. We shall do. Actually, I'm going to need to bring you back very quickly, guys. We'll do it on another screen. Bear with me. Okay, first chart we will have a look at this morning is going to be gold. So I'm just going to take you, first of all, we'll just have a look at the gold chart just without, let's give you some colour on gold. We'll just take a look at the weekly at the moment on gold. So first of all, weekly on gold, we did as we expected. So for those of you who joined us for the end of year webinars towards the end of 2013, we were expecting a bottom out of the market towards the end of December in order to trade the January effect. This worked out, in fact, perfectly. So on the last day of the month, 31st of December, and also on the 1st of January, we reached a bottom for gold. We came down to 1182, and then we moved over 600 points to the upside over the first couple of weeks of January. This was, I hope some of you caught that move, because that really was a very straightforward trade to take advantage of. So we moved up, we bottomed out 1180, we came up, you can see that we came up to around 12, just above 1250 level, I believe it was 1255. And the weekly is looking like we want to form a bit of a base here for metals at the moment. You've got a Dragonfly Doji, we've got a capitulation as well from 1180. Last week a hammer, and we've got a bit of a Doji again, an indecision in the market, where the market's opening and closing at a very similar price to where it started the week. You can see this week gold has been a little bit more muted than usual. We've not had too much in terms of volatility. We are just looking at the weekly chart at the moment, but you can actually see that we look to be forming a bit of a base here at the moment. Looking at the dailies and looking at some key moving averages that we have here, we are actually starting to work our way back above the 50-day moving average. Now, this is an important moving average for the gold market. You can see here we're also bouncing Fibonacci level just this morning at 1239. So we do have a little bit more work to do on gold here. You can actually put in a bit of a trend line which is starting to form, apart from the capitulation that we had back in December. You can see this trend line which is starting to form here on gold. An important level for us to get above on gold now is going to be 1255. If we can get above 1255, the next key level that we're going to be really looking at is going to be 1276. That's important Fibonacci level for gold, and that's what we'll be aiming for. If we can get a strong close above the 50-day moving average, we can follow this trend line. This will be the key level that we'll be looking for to the upside for gold. So if we can continue to form a base from here at the moment, that's what we will be having a look for. Now, for the 4-hour time frame is presenting us with the most trading opportunities at the moment. There's been a lot of day trade opportunities. Also, take a look, if the market gets back up to 12.55, we will also be potentially having a look to see if the market is going to struggle at that level again and offer us a sell short opportunity. We should come to a resolution soon on gold. If we can come and retest 12.55, as I said, if we can get a breakout, we'll be looking at 12.76 as the next key level for gold to come up to. If we can't break above that, we have a failed move. We are coming towards, we're about on the 17th of January at the moment, so moving into next week, we're going to be starting off. We're going to have about 10 days left of the month. Be aware that also we've got the Chinese New Year, which begins on the 31st of January. Now, what typically happens during the Chinese New Year is that China have a 1-week holiday, and China provide a lot of support for the gold market overnight. They, if it's had some negative moves and downside moves during the day, often China will support the gold market overnight. There's a lot of buying which does occur overnight. Now, the gold market, if you look back historically, it won't be able to get supported during that first week of February, during the traditional buying from China and Asia, and subsequently we often see a sell-off which commences from the first week of February. So that's something you want to watch out for. So I think any strong moves to the upside here might be just short-term until we get the Chinese New Year. So just bear that in mind for the time being, that we're probably going to be looking to take profits off the table more on a day trade capacity rather than trying to stay in some longer-term buy and hold, just due to the Chinese New Year, which is going to be coming up in about next from Monday onwards. It will be about 10 days' time. So that's what we're looking at on gold. If we take a look at the Australian US dollar, that got this week, we broke through a very key level of support. We've actually, if we take it out to the weekly, we broke through some 4-year lows here on Australian US dollar. And really the next key levels of support, we can see the market is starting to find a little bit of support here. I do want to see how this daily candle works out. The weekly is just looking incredibly on the bearish side here. There isn't really a reason for the market to find support technically where it is at the moment, unless we get some fundamental news which drives Australian US dollar up. The next key level is not until 0.87088, which is 70 points lower from the current price at the moment. You can see technically on the daily time frame, there's not really too much of a reason to be buying into Australian US dollar. I would like to get a buy opportunity for this market. However, technically speaking, trend is your friend. We're below all the key moving averages here on Australian US dollar. It looks like we've potentially got more downside. The only thing which will really pull Australian US dollar up at the moment is if gold continues to build a base here, and if gold continues to break out, we can get a move towards 12.76. That's going to pull Australian US dollar out of its slump at the moment, and there might be some opportunities. Again, I'll be looking more at the 4-hour time frame for opportunities to day trade Australian US dollar. It does look like it is building a little bit of a base here around 0.877, although we just sold off again overnight. I think if we break through yesterday's low, we could then be in for further downside, and there's really, I don't see a lot of support until this fib level just below here, which is going to give us roughly about 67 point move to the downside. So, but Australian US dollar, really keeping a close eye on this to see where we're going to fire. You can see this consolidation zone that we are following at the moment. So if we break through yesterday's low, probably 70 point move lower. If we can break to the upside, then we could get certainly a move to this Fibonacci above, just at 0.88468. So that's what we'll be looking at on Australian US dollar. Now, certainly you want to keep an eye on Brent going into next week. Now, Brent has an incredibly strong trend line, which has been in place since mid-June 2012. So we've got 1, 2, 3, potentially 4 bounces here. You've got a nice hammer forming on the weekly time frame. That gets confirmed next week, and we can get a solid move above 107. That's going to be present a strong move as we go into the end of January and into February. And in terms of seasonality, February is typically a bullish month for oils. You can go back on the chart. Historically, what we'll probably do is we'll go over that in a bit more detail on next week's FX Street. We'll be looking at this the move that we tend to get in February on oil. So we look like we're reaching a bottom on Brent here. Do keep an eye out for that on the weekly. At the moment, we're definitely keeping an eye on that. On the daily, we have had some nice opportunities. As highlighted, we had a nice day trade just this morning from Brent, but I'm really just keeping an eye on the 107 level at the moment to see if Brent can build a base, and especially on the weekly, if it can fire next week. If we close with this strong hammer where we are at the moment, next week we'd be looking for a confirmation of that above 107, and then we can take should be a nice long swing trade on that throughout February on Brent. Looking across to WTI oil at the moment, WTI oil doing a bit better than Brent. It's back above some key moving averages. Now, WTI, what you want to watch, it looks like it's close to firing off above the 95 level here. So you can see we've got a V-shaped, a base which has formed here on WTI, and we've got this key level to break through now. So you can see 1, 2, 3 tests of 94.75. If we can break through that today, we've actually got a nice setup here based on the Gold and Silver Club strategies here. So we're looking for a breakout to fire to the upside here and give us a move towards 96, which is the next key Fibonacci level. That would be a nice 100-point move. You can get that. So that's going to be roughly about 125. We can break above 94.75. That probably would be my top pick of this morning. WTI, one to watch. We're ever so close now. We're only about 15 points away from triggering. So keep an eye on WTI. If we move across to copper forming a base but consolidating. We had another nice trade opportunity midweek on copper. You can see we bounced off again just underneath 3.30. We're still consolidating on copper. Copper tends to also lead gold and silver. We see often a knock-on effect. So copper, we often see a domino effect. So copper will have either a surge to the upside or the downside, which is often played through into gold and silver, although there's a little bit of a lag time on that. So copper indecisive, got a doji on the daily time frame. We're just consolidating on copper, waiting to pick a direction here, similar to gold, similar to silver. So there's no real key setup here on copper at the moment, but I'm going to be keeping an eye on that to see which way it breaks. Now, if we move across to silver, silver also building a base. We had a capitulation on the last day of the month, which we discussed on the last webinar of 2013, that we were looking for the metals, the bottom right at the end of the year, which we did get. We got a nice surge higher. Again, silver here battling with a 50-day moving average. It looks like it's just about starting to win here, closing yesterday above the 50. It's closed the last 4 days in a row above the 50-day moving average. So we're probably just waiting here. Again, we could still move lower here, or we could get a breakout to the upside and take us to the 20.83 Fibonacci level. And ultimately, I'd like to see copper get some momentum here and silver get some momentum here and get above the 200-day moving average for a prolonged move above 21.64. But it's got some work to do, and especially seasonality-wise with the Chinese New Year coming up in about 2 weeks' time. So we'll see how that goes. So we're still waiting. So really, what are you going to be looking at to get direction? Well, you're going to be looking at the US dollar index is going to give you the next clue as to what's going to happen next. So the US dollar index, we had that strong move on the employment data this week, which we traded to the upside. That put pressure on gold and silver. We're also building a base here on the US dollar index. Hasn't got too much work to do before it can get back up to its 200-day moving average and break to roughly about 4-month highs if it can get above 81.50 here. So we're not far away. We're only about 50 points away from breaking out to 4-month highs on the US dollar index. If it can do that, then we are going to be in for some pressure on gold and silver. Again, we've got a bit of indecision here, a bit of consolidation. There's still some work to do with US dollar index, but it's above all its most of its key moving averages apart from the 200 at the moment. So you're going to be wanting to watch that, and this is going to be fundamentally driven as to where the US dollar index goes next, and that's going to really decide the next move for gold and silver. Finally here, what you want to be looking at is also natural gas. Natural gas looking quite interesting today, actually. Natural gas here, we've got massive inverse hammer on yesterday's daily time frame and the day before that. We did have a nice bounce off the 50-day moving average of 3.997 Fibonacci level just last week. So we've come up to that key Fibonacci again, 4.492. We found resistance. I'll be waiting to see if we're going to confirm these inverse hammers here and break below 4.31, although we do have a cluster of moving averages, which I'd like to see the market come down. So we'll see if we get a move back towards a rotation, back towards 4.129 before going higher here. Let's just take a look at the weekly. The weekly on natural gas is still looking quite strong. So, and also on the weekly, the key level really to get above is 4.57, which would represent the high from December. So again, topic really for me right now, definitely going to be WTI. We're going to be watching this very closely. Gold, we want to see if we're going to build a base and get above 12.55. Can we do that today or over the course of next week? Going to be following Brent on the weekly very closely. Australian US dollar, can we build a base from here, or are we going to break through the 0.877 low and just come down 70 points lower to the next Fibonacci support? So those are the technicals. We'll take a look over at the fundamentals, see what news that we've got occurring over the next week and today too. Okay, so in the week ahead, Monday, the 20th of January, we have Chinese GDP. So that is at 2 a.m. GMT, 9 p.m. Eastern Time. That measures the annualized change in the inflation-adjusted value of all goods produced by the economy. It's the broadest measure of economic activity and the primary indicator of the economy's health. So China is a big buyer of gold, silver, copper, and oil. A stronger than expected number should be taken as positive for the metals and energies, and a lower than expected number as negative. So that's going to be important for your commodities trades on Monday. Next Thursday, 23rd of January, we have the US unemployment claims at 1:30 p.m. GMT, 8:30 a.m. Eastern Time. The number of unemployed people is an important signal of overall economic health because consumer spending is highly correlated with labour market conditions. Unemployment is also a major consideration for the FOMC, who steer the country's monetary policy. So a higher than expected number should be taken as bullish for the US dollar. A lower than expected number should be taken as bearish for the US dollar. Next Thursday, 23rd of January, we also have the US manufacturing PMI. That index measures the activity level of purchasing managers in the manufacturing sector. So a reading above 50 indicates expansion in the sector. Below 50 indicates contraction. Traders watch these surveys very closely. It can be a leading indicator of overall economic performance. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. That's Thursday, 2 p.m. GMT, 9 a.m. Eastern Time. And then moving into next week as well, Thursday, we've got more key news. We have the US existing home sales, 3 p.m. GMT, 10 a.m. Eastern Time. That measures the change in the annualized number of existing residential buildings that were sold during the previous month. That report helps to gauge the strength of the US housing economy and is a key indicator of overall economic strength. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. Then next Thursday, of course, we have natural gas storage inventories. That's very useful for your natural gas trades. The Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. That has a very big effect on natural gas. So while this is a US indicator, it does tend to have a greater impact on the CAD due to Canada's sizable energy sector. That's important because the CAD is correlated to oil price. And next Thursday, of course, we have the US crude oil inventory. That's at 4 p.m. GMT, 11 a.m. Eastern Time. And that data reports the number of barrels of crude oil commercial firms have in inventory. So commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish for crude oil. And of course, if you would like to find out more now for the 2014 dates for our Gold and Silver Club Masterclass workshops, you can also find out more about how to join our exclusive live trading room and also be able to trade live news events with ourselves at the Gold and Silver Club. You can find out more about the upcoming dates we've got for workshops in London, New York and Johannesburg. To request information, you can go to the Gold and Silver Club live trading room and coaching programs. You can go to join the goldandsilverclub.com or contact us on the numbers below. So that's just 0207 193 0403 for London, +1 646 808 0403 for New York, and +27 1108 38403 for Johannesburg. Or just email us at office@thegoldandsilverclub.com to find out more. And of course, take advantage of our newsletter. You will receive free weekly gold, silver, oil, commodity currency news, live market analysis and prices, and you'll get invites to exclusive webinars. So do take advantage of that too. Okay, perfect. So we've got a lot to look at today and moving into next week. So I wish you all good luck with your trading today and into next week too. And we will definitely catch you back here at the same time next week. And if you need any additional help or you want to get in touch or want to find out more about our 2014 courses, just get in touch with the details on the screen. Okay, take care, everybody. You've been a great audience, and thanks to the team at FX Street for all their help in putting on the webinar. Take care, guys. Bye-bye.